We are live, finally. Sheesh, what a morning. Good morning, everybody. The morning show is back. I'm here. JC here. Strazza is sort of out this week. He's doing the family trip, but he may pop in. Maybe we'll get him call in tomorrow or Wednesday. I don't know. But JC's here. We're running behind. We got a lot to get to. So I'm just going to bring him on right now. No intro, no nothing. Just cold, right? Just like that. Just
Boom,
like
boom.
that.
We are back. We are
Yes.
back from Walt Disney World.
How was it?
You know, honestly, it was pretty unbelievable, man. You
Good.
know, they do such a great job for the kids. The kids, the smile on their faces, the customer service is really amazing. You know, anybody who's got anything bad to say about the experience of Disney, I mean, I think they're going about it all wrong.
And
You know?
it's also probably true like most things in life where you get what you pay for. So
You get what you pay for, and also your attitude towards it, right? Like, you know, it's a long day. You know, they block off certain routes for parades and stuff like that. So you got to go there knowing that, you know, you're in for a workout, you know, especially with 3 kids. I mean, it's like a hustle. So if you go in with the mentality of, all right, for a week, I'm going to get the best workout ever, shoulder presses and bicep curls all day long, 25,000 steps a day. You know, if you go in with that mentality, you know, the kids, you know, I got twin 3-year-olds and a 5-year-old. So you're going to have some meltdowns, right? You know, you got to go there with knowing that.
no doubt.
And as long as you go there with that mindset, which I mean, I clearly did, you know, you walk out of there, it's like, wow, that was pretty unbelievable. You know, only a couple of meltdowns, not too bad. And at the end of the day, they put on a great, you know, they put on a great show. Kids had a blast.
Good.
You know, and you know, you learn a few things over the years, where to eat, where not to eat, you know. The lamb chops over at the Princess Castle were a lot less salty this year, so very happy about that. You know, Norway, these Norwegian meatballs in Epcot are off the charts, man, off the charts.
Glad you had fun. I will be probably copying your technique of not going to Disney like this week or next week. You go last week. You go the week before the holidays. So it's not
100%. The place was empty. We were walking in and out of rides. You know, we were in the teacups, and we got done with the teacups, and we didn't have to get off. We just stayed on, did it again. You know, we went on Space Mountain back to back, no lines. You know, it was off the charts. So then I'm wondering, is this the economy that is struggling, that Disney is so empty? Or did we just nail the timing?
Maybe.
Right? And so, you know me, I ask questions. My wife calls me Questions McGee. So I'm asking the local employees there while they're taking pictures of us, because they're taking pictures all over the place. And as it turns out, here's the deal. This is the week to go, right? The week that I went is the week to go. The week before that, also good, which is what we did last year. I think this year was better. The middle week of the month of December. Place was empty, dude. Empty. Epcot, empty.
Good to know.
Magic Kingdom, empty. So that's number one. Number two, it's like, all right, how was November? Because November is supposed to be a busy month. So if November was empty like this, that's a problem for the economy, most likely, right? As it turns out, I asked a bunch of people, a bunch of different parks that work there, and the answer was unanimously November was busier than any November that they could remember. So the fact that it was empty last week is not the economy. It's just that we nailed the timing. Nailed it.
Good job.
Nailed it. So when the time comes, me and Steven Weitzel, right, who just started a new show on Stock Market TV, hell of a show. He's built for that. Me and Steven Weitzel are going to do a video on how to do Disney with your family. You got young kids and you go to Disney, dude, because he's an expert. I learned a lot from him. I've learned a lot of things myself. We'll combine notes and we'll create a how-to for, you know, people of finance, traders and investors, how to properly take your family to Disney, the do's and the don'ts. I think that would be a hell of a video.
And you have to consider how to time it with the market, right? You know, how to, you know, how to optimize your portfolio so you can check it when you're riding Space Mountain and you're doing the things and all that.
I was doing all that.
Yeah,
I was doing all those things. You
awesome.
know,
great.
Yeah.
Okay, let's talk markets for a change, and then we'll bring on Kenny. We've got chart kid Matt from Rinholtz Wealth Management on the show today. So he sent over quite a few charts about market breadth, about bubbles. You're gonna not bubble charts, just market bubbles. So
Love it.
You're gonna love that. And then we'll have Jason Perez wrap it up today. So let's go. State of the markets. Gosh, these commodities, they won't stop.
All right, ladies and gentlemen, we are back. Happy to be back, guys. I missed you guys. You missed me? I don't think anybody.
Oh yeah, JC.
I definitely missed you guys. That's for sure.
Dude, you picked a tough week to go because I sound sick now. I'm actually not. My voice is just not recovered. But I was sick last week. Steve was getting sick last week too. It was a struggle. It was a struggle, no doubt. But we powered through without you.
Happy to lead the charge, guys. I missed you guys. We got the Dow futures doing absolutely nothing this morning. 0.0, 48,500 for the Dow. S&P 500 futures actually up 40 basis points, almost 0.5%. That's 69.16 up 28 handles on the day. NASDAQ 100 futures leading the way, up 0.2%. That's 163 points to the upside for the NASDAQ 100 futures. That's 25,740 for the NASDAQ, up 0.2% on the day. We got 30-year bond futures doing nothing this morning, 0.0 at 115.5. We got copper up slightly at 551. That's up there. We got gold up again, 44.60 for gold. That's 1.6% to the upside. That's $72 of upside this morning for gold. Silver up 2.25%. 69 for silver. $69 an ounce for silver. Wow. With the VIX flat this morning, but still at 15. To me, that's still relatively elevated. And then over in funny money land, you got Bitcoin up $1,000 this morning. 89,773 up $1,000. And we got Ethereum up 1.6%, back above 3,000. 30.50 for Ethereum. Over in Solana, 126 for Solana, up 0.5% on the day. And that brings the total crypto market cap, Mr. Spencer Israel, back above 3 trillion. 3 trillion even for total crypto market cap. How do we feel about this morning's futures?
I think if we keep this up look, the story of the year was already going to be probably like the move in metals, right? Gold and silver. But if we keep this up for the next week or so, it's going to be like, it's going to go mainstream, right? Like it's going to lead to like world news tonight, gold and silver, right? It's going to be.
By the way, I skipped on crude oil there. Maybe it was a little Freudian slip. Crude oil at 58 up 2.7% on the day. Sorry for that, guys. But yeah, I'm making moves this morning as well. I am irresponsibly long of oil and gas.
I know.
And so I'm not upset about it. Not upset about this morning's action there.
I think we may be approaching escape velocity for the metals, and they may because everyone in our world obviously knows about that already, but like my parents probably don't. For example, we may be approaching that happening soon if this keeps up. I mean,
silver at 69, man. That is that's serious right there.
Yeah.
I feel like it was in the 20s like a week ago, So as usual,
6 months
as
ago.
usual, the feeling is the same. My precious metal stocks are, some of the best performing stocks that I own. And the feeling is real. What's my feeling? I should have bought more, right? Like, as in theory, you look at your stocks doing well, you should be happy. But I'm a human. And I'm not upset about it, but I kind of am because I should own more. I should have more precious metals exposure. I thought I had enough. Clear. When you're right, you're not long enough when you're right. And this is one of those situations. This is my real life, real talk. I mean, I'm long oil, precious metals. Obviously, I'm the one who told you that gold was going to 5,000. You thought I was crazy. You, Spencer Israel. I'm talking to you. You thought I was crazy. So I'm long, but clearly I wasn't long enough. Anybody who's long will tell you the same thing. I should have bought more.
The next month or so is probably going to be, or could be, the most interesting month in like the history of metals, in my opinion, because everyone does an end of the year review, right? We all look at our portfolio. We all look at our winners. We all look at our losers. We all adjust, and with the calendar turning, and everyone's going to see gold and silver if they haven't already. And I'm very curious to see how these markets go with the turning of the calendar. People are going to be chasing this. They already are, right? And what does that mean for the price? I don't know. Like I don't have an opinion. I don't really have a bias one way or the other. But I'm more interested in gold and silver for the next like 4 to 6 weeks than I ever have been, because a lot of people are going to be like, because there's going to be all the articles. They haven't even. Well, they're starting to come out now, but they're going to come out for the next 8 days. It was a record year. Did you know that? It was a record year for gold and silver. Did you know that that gold and silver destroyed?
No, you make a good point, Spencer. You're going to get a lot of those. You're absolutely right. Like the end of the year stuff, you're spot on. Best year ever for metals.
Best year ever. Yep. Did you know that stocks did well and yet they got destroyed by gold and silver? Did you know that? Everyone is going to be chasing if they're not already. And
you're 100% right.
And it's going to be crossing into the mainstream. I've already seen it a little bit, and I'm extreme. I've never been more interested in gold and silver than I am right now, only because of the timing of this all. We've had the great year. Now we're getting to the point where everybody does a little bit of reassessing. Maybe they buy a little here, they sell a little there, they reallocate there, and it's human nature to want to chase this stuff. So I'm very excited to see what happens.
I would advise watching the dollar. The dollar's getting slammed this morning, right? Rolling over after a bounce last week. If that dollar really rolls over hard here, you're gonna, the likelihood of another leg higher there in precious metals. And then there's another lesson here. When precious metals started doing well, you had these sociopaths out there on the interwebs telling you that, the gold is warning of something. There's something big brewing because gold is doing well. As a reminder, those people were lying to you. There's no evidence whatsoever at all in history that rising prices for metals is somehow bad for stocks, right? And I said it at the time when the sociopaths were telling you that there was a warning from gold and silver prices. They were warning, right? Remember that? They were lying to you, right? Which is why at the time I was being obnoxious about how if precious metals are going up, own precious metals. Don't sell your stocks because of that. Stocks are putting up another banner year in the face of rising precious metals. By the way, to Spencer's point, precious metals destroying the performance of equities. I mean, obviously, precious metals, all the GDX and SIL, all the precious metals, they've doubled this year plus, right? So the S&P 500 didn't double this year, right? But putting up a banner year in the face of rising precious metals, that's perfectly normal. So this is a lesson because you're going to see that again in the future. By the way, precious metals and stocks can sell off together also, right? So it works both ways. I know we got Kenny in the house, but I did want to show a couple of charts.
Yeah.
Throw up slide 2 there.
I saw you tweeted this.
I mean, high beta made new all-time highs for high beta on an absolute basis and relative to low volatility, right? So
this is remarkable. I don't know what's in the SPHB.
Yes, you do. Technology and consumer discretionary. We talk about this all the time.
No. I meant from like a top weighting standpoint on the individual stock level, not sectors. I know what's in it from a sector level. But this is funny when you juxtapose this against like junky high beta. They don't look the same at all.
What is junky high beta?
Junky high beta would be like D-Wave would be an example. The Okilo would be an example.
Well,
right?
I mean, I don't know what you mean by junky high beta, and not to be combative right off the bat from the moment I come back. But I mean, sure. When you say dumb shit, you say dumb shit. Listen, the high beta index is equally weighted. So all this speculative stuff is in there, Spencer. Well, like the largest weighting, right. I'll give you the largest weightings of the S&P 500 high beta is Robinhood at 1.6%, Tesla at 1.5%, AppLovin at 1.5%, Monolithic Power Systems, Coinbase, Broadcom, United Airlines, Micron, Microchip Technology, MCHP, VistaCorp, VST. I mean,
all right. I'm talking about like
than that.
I'm talking about Kenny's universe. You know what I mean? Like, the Okilo, the ASTSs of the world. Actually, that's a bad example. The quantum trade, the AI trade, right?
Yeah, but understand that a lot of this is the S&P 500 high beta stock. So a lot of these names you're mentioning are not even in the S&P.
You're right. No, you're right. You're exactly right. That's why I think it's
all
interesting.
Those names you're mentioning don't actually matter.
You're right. They're too small.
They don't matter. The companies that matter, we're looking at the companies that matter, and the companies that matter.
That's the interesting thing here.
So the offense is on the field, right? Kind of like that fourth quarter drive by your Miami Hurricanes, right? They put the ball in the playmakers' hands so that they can make plays. And what did they do? They made plays. Your offense is on the field. So call your offensive plays. Kenny Glick, bring them out. Bring them out.
It's been a long time coming. They ain't come from my club, they took it. Putting up numbers, 99 pounds, and I still kept it 100. Hold up. Yeah.
Kenny Glick in the house. Go Dogs.
Coming in hot. What up, homie?
Oh, everything. It's a bull market. I don't know if you heard. Shorting is short-lived, and you're going to die.
Oh, yeah. That's what we've been explaining to people the last couple of days. But, man, when it turns, you better get out of the way. That's the whole premise, right? Because if you're going to stay short a market that never goes down, you are definitely going to die. And it looks scary there. And I was hoping and praying. I'm doing the highs. When we broke 620, I thought we were going to drop another 18 points. And guess what? We didn't. And then UVXY crashes. And that reminds you, oh, yeah, market never goes down. Wake up. And we bought the Qs. But more importantly, you guys are buying silver with me, right? Let's go. Let's freaking go.
Well,
I bought silver when I was in Vegas. I bought physical silver, and I thought that was the top. Remember, I was in Vegas? Remember? Yeah. And I'm showing you guys all the silver that I bought.
Okay. Well, I mean, there's a lot to talk about. We're doing these videos on TikTok and YouTube all morning. But I was talking to some hedge fund guys, and the guy couldn't even express how excited he was. And this is a legend in the industry. He's saying 80 to 120 easy. It's a global thing. He kept
120 is what I've been thinking.
He's thinking, you don't understand. I'm like, no, tell me more. He's like, no, you don't understand. I'm like, I want to understand. Tell me more. He's like, you don't understand. I'm like, I want to understand. Tell me. And he was very excited about silver. And this is a guy, a legend. I can't even give you his name. He told me, promise not to tell. But the real conversation we've been having this morning was, don't mess up when you come to my chat room. And I appreciate everybody coming to the chat room over the last couple of days. We did a little dog and pony show on Thursday, me and Strazza hanging out. So people walk in, they want to know, again, we've been talking about this trade that works every time. And we also had a couple of other lotto plays on that day, right? So we had open, we had some Tilray, and like 2-cent options, right? We're like, all right, you got probably a 5% chance of this trade's working, but we're going to buy them 2 cents for some lotto. We throw a $100 bill on it, right? Maybe it works. That's not the trade you want to be taking. When I say the trade has pretty much no chance of working, but at 2 cents, let's give it a shot. The FedEx is where you want to be. Let me show you this FedEx trade. So when you walked in the morning,
transportation stock, Spencer.
When you walked in and you came in from watching this little dog and pony show we did, right? The first question you should say is, Kenny, show me the trade that hasn't failed in 4 years. And I would say, sir, here it is. Get ready. FedEx. Fake them out. Shake them out. VWAP break. 930 high. blue line to orange line. So right there was the trade. Fake them out, shake them out, VWAP break on an earnings report. And your entry point, and I was late to this trade at 277, and look where it went, friends, to the orange line for 7 points. So one person in the room said, well, I didn't catch that first move. Is it still a good buy? And I said, yes, it is. Because if a stock breaks 285 on a Friday, chances are it's going to go to 287.50. And if it breaks 287.50, we're probably going to close at 290. So it certainly is a new buy. Just use the orange line as your stop now, opposed to the blue line. Boom! You're in. 285, got you 287.50. And wait for it, drum roll, please. Where did we close? 290.
Dude, what a stick in the trannies last week. Woo!
Bang. So if you're coming to the room, ask which ones are the best trades, not which the lotto plays are. You want to throw some $100 bills on fire? Well, if you're going to take those trades, like the open and a Tilray, why not do the QQQ into the close? Because we know that the market likes to rally into the close on Fridays and generally goes all the way up till 8 p.m. and then gaps up on Monday. So where were you on that one? Oh, you only wanted to take that one trade with us, with 25 trades going on? Don't pick the lotto plays if you're first coming to our room, especially if you're paying to be there. Take the high quality setups. And when I tell you, look, this market's not going down, and you could buy some QQQ calls into the close at 12 cents and bang them out at 36, 48, and 50. That's the kind of trade you want to be involved in. If you're going to take Glick's picks, you got to pick them all, or don't take any. Stick with the trade that works every time. So
yeah, I used to be a trader.
It's
a tough racket. It's a tough racket.
It is a tough racket, but that's the point I've been trying to make, and that's why Glick's picks, right? It's not Glick's picks. It's learn from the Glick, right? Learn from the Glick. Oh, yeah, I think I got booted off TikTok. Sup, y'all? I'm still here. So that's it. So we're doing a rinse and repeat. I got the Qs long, I got the silver. I'm waiting to sell. That's, once again, as long as they're over that blue line. But we got Fat Finger Freddy down at 617.50 this morning, giving us a little warning that we might get a little dipsy-rooski.
This is on the Qs.
This is on the Qs. But we got to break the blue. If we don't break the blue, we're not going to say hi to Fat Finger Freddy. But look at the price, 617.50. It's not a coincidence that these prices keep printing. 617.50 gets you 620. So break 620, maybe we go down and say hello to 617.50. But while we're doing that, just go over there and glance at UVXY as it's continuing to descent. And by the way, anybody still short? This is the only other stock I talk about holding. Short. It's built to go down. It was $67 3 weeks ago. It's at $37 now. How could you lose? Just don't trade it over your head and you'll make money.
Quickly, for those who might not be familiar with a one fat-fingered Freddy, just give a quick rundown as to what that means.
Yeah, over the last couple of years, especially on Thinkorswim, we're getting these out-of-money prints. And we thought nothing of it. We thought it was a late print. Aftermarket, you do see late prints, and they're insignificant. But we get these prints really around 8 o'clock a lot, between 8:00 and 8:05. And now, more than 50% of the time, we're getting to that print organically throughout the day. So I always have to take it under advisement. It doesn't make any sense, but now it's starting to make sense if you believe that the market is pre-programmed and rigged like we do. So this continues to happen. So right now, if they do break VWAP and we start breaking pre-market pivots, I'm going to assume we are going to go test Fat Finger Freddy. And that would be a nice retest of some support from Friday. But when something happens and it seems like it's an anomaly, but then it seems to keep happening, it's no longer an anomaly and it's worth your investigation. It's worth, keeping an eye on it. And we're seeing it 50% of the time now happening. That's a lot. So
over 50% of the time, you think?
Yeah. That's what's strange about it.
Wow.
It used to be just like, what was that? And then nothing. Now we're going to these prints. It's very, very bizarre. But again, it just lends into the idea that this market is absolutely rigged. But right now, don't short anything. All right. Be careful out there too, my friends. But we got
I love it. I love it. See you later, Kenny Glick. How about them Canes, baby? How about them Hurricanes?
I had them too. I had a good week in sports gambling. I'm back.
Too bad.
Jets, Giants, and Ravens, man. Jets, Giants, Ravens. Parlay hits almost every week. Jets suck, Giants suck, Ravens suck. Good luck.
All right. Adios. Full disclosure, gambling is a tax on the stupid.
Don't do it. Don't do it.
And stay away from the drugs. Stay away from the drugs. No drugs, no gambling, no hookers. You stay away from those three things, man, you're in pretty good shape, man. I got to tell you, you know, I get kids, you know, young kids in New York City making some money, and they come to me for advice. You know what I tell them? Stay away from the drugs. Stay away from the hookers. Stay away from the gambling. And you're like 90% of the way there. You know, go out, drink, make some bad decisions. You know, it's fine. You know, smoke your weed, whatever. Stay away from the drugs. Stay away from the hookers. Stay away from the gambling. I'm telling you. I know it's really that simple. I'm telling you. I've seen many a good man go down from one or all of those. It's usually kind of just one, you know. Right. It's stay away.
On that note, let's bring on today's guest, Matt Cerminaro from Ritholtz Wealth. And we'll talk breath, we'll talk bubbles, and it's going to be fun. Let's do this.
All right, do it. Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Man, what's up?
Yo, what's up, JC? How are you?
How you doing, my man?
I'm great. Things are good. Holidays are good. I was in Vermont this weekend. Got some fresh air.
Where in Vermont were you?
Jamaica, Vermont. It's like middle of nowhere. One. Yeah, middle of nowhere cabin. Michael was asking me for charts on Sunday. I was like in the middle of nowhere.
The irony of naming a town in Vermont Jamaica is hilarious.
Yeah, it's pretty hilarious. Yeah, but yeah, so it was good. How was your trip? You just got back, right?
Man, you know, how old are you, Matt?
I'm 26.
Yeah, take your time, buddy, all right? Take your time, right? When you have kids, everything changes. But yeah, it was good. You know, you got to go into Disney with the right mindset. You know, some people, you got some angry people there. You know, they're complaining that they got to walk too much or spend too much or, you know, whatever. You got to go in knowing where you are. You know, it's like, you know, you go to McDonald's and you're looking for sushi, you know, you're going to be real upset about it. You know, you got to know where you're at. Right?
100%. Lines are crazy. It just is what it is. That's just Disney.
What it is. All right. So, I heard you had some charts.
I brought 7 charts.
They call you Chart Kid Matt for a reason, I'm sure.
That's right. I speak off the charts, JC. That's it.
I like it.
I do.
I like it. What do you got?
All right, let's do it. All right, Spencer, can you throw up slide 1? All right, guys. So last time you guys had me on was April 14th, okay? So we always
was it really that long ago?
Yeah, it was a while ago. And think
That's
about
Spencer's
it, right?
fault, by the way. That's all Spencer's fault. He gets the blame for that. It's unacceptable.
That's all right. I forgive you, Spencer. Okay, April 14th, I was on. And so things were like effed up, right? It was post Liberation Day. People were posting penguin memes. It was bad out there. But a bright spot at the time was this breath data that I brought onto the show. And we always talk about this data, but I feel like it's important to revisit some of these things because we're always looking at the next idea to post. And let's revisit this to see what actually happened, okay? So what I looked at was days where 98.2% of S&P 500 stocks advanced on any given day. And all of the times that's happened back to 1998. So here's the instances. And at the time, I had shown these sort of forward returns after these instances. And the historical average from a day where you have this many stocks advance was 13%. And the max drawdown on average was 4%. So now let me show you what happened after this. So the next slide, Spencer, if you want to just toggle to, here we go. And you can't ignore this stuff because look what happened. The S&P 500 rallied 23.5% over the next 6 months. We had a 5.5% drawdown after that. Like this breadth data that everybody looks at, I think a lot of people point fingers at and say, "Oh, you should just ignore that. It's not fundamental." You know, people put it to the side. And this stuff, at least in my time working for Tom, my time working for the Ritholtz guys, this stuff has consistently worked. And JC, I wanted to ask you, like, Are you constantly looking into these breath signals? Like, what are your thoughts on breath thrust generally?
You know, everybody's got a thrust. I feel a little left out that I don't have one. You know, we need like a JC breath thrust. But I'm not so much, you know, we have our, listen, when there's a bunch for me, it's not who's thrust. If there's a bunch of thrust, if there's thrusty action, if we're getting the biggest moves we've seen in a decade, 2 decades, ever, biggest 1-day move, 1-week move, like those kinds of things stand out to me, yes. But for me, when it comes to breath, and I think about this every day for decades now, the real answer to market breath is you got to go in there and you got to do the work. Put on some music, pour yourself a glass of wine, and just go through thousands of charts. And that's really the key. You know, we quantify it also, right? Yes, we have all the quantitative data. We've spent $1 zillion on all the models. We have a huge team. Yes, we have all of that. But I got to tell you, there's nothing more valuable and nothing that gives me more confidence in approaching the market than sitting there and doing the actual work. And I was gone for a week. And yeah, I was looking at charts here and there, but I hadn't done the whole thing until I got back. And there I was Sunday morning going through the charts. And I'm like, damn, breath is pretty good.
Are you just flipping through like sector by sector and you're just going chart by chart? Like, what does that system even look like for you? Because I did it once on TradingView with the S&P 500. But like, are you just...
You only did it once?
I've only gone through every single stock in an index one time. And it was after
You got to do that once a week, man. You got to do that once a week.
Yeah.
So it depends what kind of mood I'm in. And that's my advice to you. Like, don't let the market dictate your behavior. You know, do what you like. If you feel like you're in an international kind of mood, go through all the stock market indexes in the world, right? Go continent by continent. You know, London, France, Germany, Austria, Spain, Italy, Greece. Go through Europe. You go to Asia. You got Japan, you got China, Philippines, Singapore, Indonesia, Malaysia, Australia, New Zealand. You go to Latin America. You got Peru, Brazil, Mexico, Chile, right? Go continent by continent. You'll see Africa making new multi-year highs. You'll be like, hey, breath is pretty good. Because it's not just a U.S. stock market. It is a stock market, right? So it is a global asset class. So when you talk about market breadth, you gotta include the international. So if you're in an international mood, do that. What I encourage everybody to do is go through all 30 stocks in the Dow. If you don't want to do what Matt did once and go through 500 charts, you could just do 30 and do the Dow Jones Industrial Average. And guess what? You're gonna get the same result, right? Because if you overlay the Dow and the S&P 500 going back 75 years, guess what? They look the same, right? So you could do 500 to 30. I do both. If you don't want to do the 500, at least do the 30 every single week. It'll take you 5 minutes. And then do the 20 trannies also. So that's 50 stocks that I would argue are probably the 50 most important stocks in the world, right? You got the NASDAQ 100. You got 100 stocks. It's not the market, but it's an important group of 100 stocks, right? You got, and then like you said, the sectors. So you got 11 S&P sectors. I do the same thing for the mid caps and the small caps also, by the way, right? So every sector has its index, mid caps and small caps. And like that's pretty good right there. That's your list.
Right.
And then the bellwethers, right? And the Dow's going to give you a lot of those bellwethers, but it's not going to give you all of them, right? So make a list of the market bellwethers and some international bellwethers as well. Maybe Deutsche Bank, Petrobras, right? Add some of those, right? Taiwan 7.
There's nothing else I like to do than go through charts. So that's it. All right, slide 3.
They don't call you balance sheet, Matt, right?
The amount of charts that I've made,
Thank God.
Jesus. Okay. All right. So people still think we're in a bubble. So I know people talk about the AI survey. I get it. It's flipped a little bit more bullish in the past few weeks, but just look at this. This is actual people searching stock bubble on the internet. And at the end of November, this was the second highest reading going back to 2015. I pulled this since 2004. From 2004 to 2015, you still did not have a reading that was as high as either of these two. So I just shortened it up so we could see the peaks better. But people think we're in a bubble. And if you go to the next slide, Spencer, I think it's kind of ironic that people are saying we're in a bubble when some of these names have already been de-risked, right? Like if you look at an equal weighted basket of AMD, Broadcom, Oracle, SMCI, NVIDIA, an equal weighted basket of these things is in a bear market right now. It's down 23%. And so you've already seen a lot of the speculation in some of these names come out.
So this
and
is equally weighted: AMD, Broadcom, Oracle, SMCI, and NVIDIA. Now, why these though?
I'm essentially saying, what are the names that people are pointing to say, it's like hammers looking for nails. Like, what are the nails? These are the nails. And people are holding their bubble hammers saying, all right, AMD, boom, Broadcom, boom. These are just the names that come up to me, right?
And then what names did you leave out and why?
I'd have to go look back at the sheet, but essentially like names like Micron, for example, it's like ripping to new highs. People are bullish on this right now. The analyst estimates are moving higher. So like people aren't.
So you wouldn't put Micron in this basket of like bubble AI stocks?
No, because like sort of like the sentiment within semis is like rotating within the different names. And like right now, these are the names that people are starting to really like kind of hate on. And I threw NVIDIA in there because I really do think people are starting to give up on the Mag 7. So Spencer, if you want to do chart 5, and I know Mag 7, I'm painting with a broad brush there. There's names in there that are working and that people like, but just generally, right? I looked at search interest in the Mag 7 versus the S&P 493. And so look at this spike in the S&P 493. People are interested in that. It's like the new consensus trade, and people stop searching up the Mag 7. I think you've seen some weakness, and what's great is like when you see weakness and then you see sort of bearish sentiment, like reflexively to that stock price weakness, I think that's what you want to see because you have that healthy skepticism in these names, and it sets you up for what I think is going to be a very strong rally and what the leaders were over the past few years through the end of this year. So yeah, where are we? We're at slide 5. Okay. All right. Slide 6. Back to this idea of, are we in a bubble, right? NVIDIA is cheaper now on a forward PE basis than when ChatGPT launched. I know you're not a fundamentals guy, JC.
No, but honestly, Strazza tells me the same thing. He's like, dude, NVIDIA keeps getting cheaper as the price of the stock keeps going up.
Yeah, because the forward earnings estimates are going up. It's not even just that the stock price has kind of like faltered over the past few months. I mean, think about what we're up since November 2022. I think NVIDIA might have, 8x, 10x. The stock has gone bananas, right? And so the multiples contracted by 15 points over that same time frame. If you look at like Cisco in the tech bubble, all of the gain in the stock price was a function of multiple expansion. So in other words, like speculation that earnings would continue to grow. And with NVIDIA, the difference is that you actually are seeing the earnings deliver and the stock price is still getting hit. So this is, to me, one of the most attractive names in sort of that bucket before, is because this is a leader. This is a company that has very durable earnings. A lot of their revenues already booked out into the future. Companies, the forward P is down 15 points. I mean, it's kind of crazy. And we got one more chart. This is, JC, I learned this one from you. So this is the RSPD divided by the RSPS. So the equal weight discretionary versus equal weight staples. This totally
is, ladies and gentlemen, this is the best financial analyst on Wall Street right here.
I was going to make that the header of the slide, but then I thought I would be stealing.
Who made that up? I didn't make that up. It wasn't me who came up with that. That's what it's called. Somebody made that up. I think maybe it was Chris Barone or Todd Sohn. Those guys, I think maybe. Okay. I don't know.
Well, shout out to them because I pull this up every single day. I might not go through all this 500 stocks, but this is on my screen 3 times a day. I'm pulling it up. And this faked me out in late November because, I'm thinking, all right, if this is what we're looking at and you see this breaking down, I would have liked to see the like late January sort of peak there, hold as support now, and it kind of broke through. But what a head fake. And I think people got bearish, and now this moved higher. It's kind of like a bear trap. And now people are like, oh shit. Like I got bearish. Maybe I sold some stocks and now I got to chase into year end. That's why I think the setup is really strong over the next
It's
month.
funny you just said, oh shit, because back in my younger days, when I was about your age, actually, I used to call this oh shit mode. because I swear to God, go back and check the tape.
Yeah.
I used to call this, ask your boss, Josh Brown, actually. He'll tell you. I used to call this oh shit mode because the short sellers are saying, oh shit, I got to cover, right? And then anybody who got stopped out is saying, oh shit, I got to buy it back, right? So I would call it, that was like my first like JC-ism, you know, because it was kind of just like the reaction. So it's funny you said that because that's exactly what I used to call this.
That's where it feels like we are. And also, I tend to be an optimistic guy. I'm trying to like sift through. There's always bears. I'm trying to sift through the actual signal in the market. So when this happened, I myself, I was like, I didn't sell any stocks, but it hurt, and I was like, I don't know about this. And so now that we've ripped higher, I'm thinking how many people felt the exact same way, and now they're chasing. So, anyways, I think the setup is good. I think that there's too many people that are saying the weakness in the Mag 7 broadly, okay, like again, painting with a wide brush, the weakness in the Mag 7 broadly is like the leaders kind of showing some relative weakness, and that's going to bring the market down with it. I think that the market's just broadening. The 493 are breaking out. The Mag 7 are taking a breather as they do after they've rallied so much over the past few years, and they're going to kind of, the baton is going to get passed, or maybe it's, I don't think the S&P 493 and the Mag 7 have to be like, sort of moving in opposite directions. Like, why can't both just rally into next year? And I think the sort of perception is that if the 493 are going to do well, no money's going to flow into the Mag 7, which I don't think is true.
You know, I'm seeing low volatility stocks making new all-time lows relative to high beta. I'm seeing consumer staples here rolling over once again on a relative basis to the S&P 500. I'm seeing the defensive stocks not doing well, underperforming massively. And I'm seeing, you know, consumer discretionary making all-time highs. Discretionary literally just closed the week at the highest levels ever.
That's incredible. I mean, look at staples. Staples are dead. Financials are breaking out.
You want to know something, Matt? Staples are dead, except Walmart, which probably shouldn't be a staple. Feel me on that?
Yes, I do. Because this is another question of what even is a consumer staple? Is Netflix a consumer staple?
Doesn't Josh argue that?
Yeah. Josh argues that. I completely
agree with that. Communication stock, but yes.
Isn't that a staple? Isn't that a household name? Like,
it is now. It is now. It wasn't when I was in college 25 years ago, mailing my DVDs. I know that you kids laugh at that sort of thing, but we used to mail these things back, and my roommates and I would fight over which DVD we're going to get next, because you had to wait for it to get there for them to send you another one, and then hope that it wasn't scratched and it actually worked. Otherwise, you'd have to send it back and get a new one.
Right.
It wasn't a staple then. It is now.
I think it's just a function, and I've always wanted to try to plot this and figure this out, but I wish there was a series out there that was the percent of revenue generated in the S&P 500 that is recurring, and somehow squaring that with the retention of that recurring revenue.
Yeah, but what are you gonna include SaaS companies in there?
No, not so much. It's more like, think about like recurring contracts that large semi names have, or think about recurring advertising deals that Meta has, or whatever it is. That, like, there's a lot of revenue that is already booked out into the future. And so how do you measure that? And then what forward PE do we assign to that recurring revenue? Because it's not 16 times, like it's not 13 times like in the railroad days. It's a higher forward PE. And so everyone's taking averages of the past 110 years of data, when I think that like the actual business models have changed so much. Again, are these staples really staples? So I've never made that chart. I don't know if anyone ever has it, but I think it would require some manual work, some deep manual work. I might have to go through all 500 stocks.
Dude, get some dude in the Philippines or in India or something like that. You can get it cheap. You know what I'm saying? I know Ritholtz Wealth is doing very well. Pony up. Get somebody overseas to just do the work and get it done. That'd be a great chart.
I'll do it. I got to do it. I got to go through it for my own sanity. But 100%. I want to see how much the line would look like this. It would be sweet. So
good.
Yeah.
Get it done. Listen, guys, Ritholtz Wealth does a great job. They're my personal financial advisors. They've helped me tremendously. I don't know anything about this financial advisor stuff. You know, I was talking the other day with somebody who I was like, oh, my financial advisor says that I need to do this or my college fund. And they're like, JC, you have a financial advisor? I was like, yeah, I don't know anything about this stuff. I don't know anything about SEP IRAs or whatever and 529. I don't know anything about this stuff, dude. So Ritholtz Wealth does a great job. So just want to give a shout out to the whole crew. Obviously friends with all those guys. Barry Ritholtz. I've been a Ritholtz fanboy since way before I even met him. You know, Josh Brown and I, old pals, of course, Badnick, you know, the whole crew. Who is your favorite Ritholtz Wealth Management employee?
Sean Russo.
Yeah. Okay.
Yeah, so, I mean, Sean and I sit right next to each other. Sean and I sit right next to each other. We're in the trenches with all the charts. We're making things for the shows. I mean, favorite's hard to. I mean, I really love everybody that I work with. Genuinely, I work with literally the best people.
Do we get a Chris Venn shout out? Chris Venn shout out.
Chris is the best. Like, actually, everybody's the best. So I mean, even like through the whole building process of Exhibit A, for example, like, having the people at Ritholtz supporting me the entire time, I don't even know if Exhibit A is a real thing without that. You know, like having people to come to the office today and chat with, it's amazing. So, yeah.
I'll be in the city later today. Maybe I'll run into you.
Oh, yeah. Let me know. I'm here.
Ladies and gentlemen, Mr. Chart Kid Matt, thank you for coming. Spencer, get him on sooner. Don't be doing this every 6-8 months thing. Get him on sooner.
Hey, man. Yeah, sure. No problem.
Done.
I don't know. I got nothing to say.
All right.
Thanks,
Matt. Appreciate
you. Guys are the best. Yep. Take care. All right.
Give him a follow. Everybody give him a follow.
I was a big fan of that Google search.
You like that one?
Yeah, that was good.
I like the best fundamental analyst on Wall Street chart that he brought in. That's a solid one right there.
All right. We started the show talking about commodities. Let's end the show talking about commodities. Let's do it with Jason Purz. And this is the day to have him on, because have you seen what's going on? I know he has. That's the point.
Jason Purz in the house.
What is up, guys? Excited to do this.
69.
69.
For those who partake. There it is.
Well,
69.
Here's an interesting one. Sam and I, for members, said that it would hit over 70 to year end. So we're almost there. So that's an exciting one. So we had 73 as our target for year end. We talked about this about 2 months ago. Right when silver hit, just started to tap $50. So now we're here, almost to 73. That would be the next Fibonacci extension. So we'll see if it hits that. So that's going to be an exciting one to year end.
Talk to me about the silver gold ratio. I know you got some charts, but I want to hear your thoughts on that and the outperformance that we've been seeing out of silver, which tends to happen in healthy environments for metals, right?
Yeah. So I actually brought a chart. God, I don't even know where it's at on the deck at the moment. Let's see here. Go to chart 16. So chart 16, I did bring silver and gold. Basically, what I'm looking at here too is like, one, the ratio is finally looking good. Should have brought a ratio chart, but we've kind of beat that one to death. Gold Rush members, you guys will see us break that down today as well. We break that one down almost every week. But, we're finally seeing that outperformance in silver. We've been talking about this at the Gold Rush for the last year and a half or so, where we're basically talking about, hey, if you're looking at gold, you're looking at silver, there's going to be a point, because everybody's like, oh, gold's there, silver's never going to catch a bid. Why do they think that, JC? Well, they think silver will never catch a bid because central banks are not buying silver, therefore it'll never move. Then finally silver starts to move. Now we're at this point here where we have a huge move. I think silver up over 110% this year, probably even more today, probably 112% now year to date. And then gold is up 60-something% year to date. So we're finally seeing that outperformance, and it's almost a double currently. But if we look at this chart too, something that I wanted to put on everybody's radar is most of the time in every single cycle, silver catches a bid that outperforms gold. So usually the outperformance in gold, which would mean TradingView wouldn't let me exactly see the top, but this is another 1,000% up. We're kind of looking at for another big move.
The line is too high.
Yes. The
It's
line in gold is a little too high.
The chart can't even deal. Too high.
No, for sure. And so now,
by the way, when the chart can't keep up with the price, that's not bearish. Right?
That's not bearish. That's not bearish. And not to mention today, everybody's looking at it. And this is really interesting. If we're looking at this and going, okay, well, silver's made a big move. Most people are going, JC, silver's made a big move. It's not going to continue to do this. The answer is most of the time it continues to do this until it actually gets to that point where it starts to outperform gold. We haven't seen it quite yet. But it's getting there. So I would say silver could, that's the interesting thing. Silver looks a little shaky up here. I know there's some weak hands up here. People getting kind of scared. Now, once again, it's parabolic. It's a big move. It's going to have pullbacks. It's going to be volatile. But I think when we end this cycle, we're going to see silver continue to outperform gold for a little while longer, 6 months, possibly a year. And then you can make a lot more money here. So I think the silver miners are still a great way to play this. Continue to make money in those. Continue to hold on to your silver stocks. Continue to hold on to those junkie junior and explorer mining stocks. They're probably going to continue to go crazy as we're in the ratio where silver is outperforming gold. I think it's also very telling if we look at this, JC. Silver's up, 112? I didn't look at it today, but platinum is up over 100% this year. You got palladium up over, I think it's around 80% this year. So you're basically seeing a structure of this precious metals bull market like you've never seen. The miners are outperforming everything. GDXJ's up 180% now or something crazy. Every single day I look at them, I can't even believe it half the time. But, GDX is up 160%, GDXJ up even more than that. The metals are every metal instead of gold is outperforming gold at the moment. So the structure of the bull market is intact. You got to stay long. Don't do too much. Use a trailing stop. Manage your risk however you do. But I think this thing has higher to go.
This is one of those markets where if you drop it on your foot and it hurts, you got to buy it.
Yep, it. And so go to 17 as well. You'll like this one, JC. So chart 17. So there we go. So I hit up Sabu this morning and we were talking about some stuff and he made this one today. So definitely follow Sabu Trade, SUBU Trade, great guy. But he put this together this morning and basically what we're looking at is the Santa rally. So we're looking at the Santa rally, which officially, what does that start, tomorrow or Wednesday?
It starts on Christmas Eve.
Christmas Eve. Okay, so Wednesday.
This year it starts on Christmas Eve.
Yeah, so we're starting on Wednesday here and basically going to January 2nd. Is that
January 5th.
January 5th. Okay. I get the year that every single year.
Changes every year, but I'm OCD, so I know.
I know. That's why I just asked you, JC. I'm like, where is it at? So anyways, he put this together for the Santa rally. And basically what we're looking at is the Santa rally for stocks has a great percentage. We're looking at 75% of the time we have a positive return. And then if we're looking at silver, 85% it has a positive return. Platinum is 80% it has a positive return. Gold miners, 85% is a positive return. And then also look at gold. 95% of the time we have a positive return in gold through the Santa rally. So people will talk about this for stocks all day long, but people also forget gold and silver actually have the best seasonality around this time of year, especially going through January. Silver had a good 10-year streak where it was up every January for a long time. So we see a lot of bullishness around this time of year. There's a bunch of reasons. I've heard a million reasons. It doesn't really matter. It's really about the data. The data is telling us to stay long here in the precious metals market and just continue to ride this trend. It's the hardest thing to do as a trader. Everybody's like, well, it's easy. Once you're in something, you just hang on to it. Nope, it's really hard. That's why most traders, it goes up a little bit, they sell this shit, they run for the hills. Really, and if you're doing that, most of the time, silver would go from 30, let's say, to 40, and you'd be out. But really hanging on to these trends, using a trailing stop, using a target. We have a target of 73 on silver. Whatever you're doing, hanging on to it, letting that thing dance till it hits those levels, that's going to be the most important thing you can do right now. And I think there's a lot of money to still be made here.
I was looking at the dollar rolling over this morning, and if you think that we're going to get another leg higher in metals, you know, it makes sense that that were to happen in an environment where the dollar's rolling over, right? Would you agree with that?
Yeah, absolutely. I think that's going to be the biggest catalyst for this trade to continue is if the dollar starts raging higher, you know, I'd say, okay, well, maybe we have to rethink this a little bit. But I still think the dollar's in the wrong environment. I mean, it's the thing I've been talking about all year long. JC, you and I talked about the top tick basically back in January of this year, talking about the dollar actually rolling over. Everybody
Boy,
thought
did it.
Yeah, we were talking about it. People thought we were a little bit crazy at that time. Looked like it was breaking out and so on, but the positioning was telling us that it was going to roll over. Next thing you know, it rolls over, and then it just hasn't stopped. And really, it's the wrong environment for the dollar to move higher. We're looking at the yield curve steepening. When the yield curve steepens, we're basically looking at more easy money into the system, which means more dollars into the system, which means a weaker dollar historically. So if we're looking at that type of environment, I would continue to say that we're going to continue down in the dollar. I think the dollar is going to hit 90. That's my thought for Q1, Q2 into next year. And I think it's just going to trend lower. I think bonds are also a place that's going to be a rough place to be next year even. So I'd continue to own the commodities, like not everything across the board, but definitely the metals. The metals look great. I would continue to stay long precious metals, copper, even iron ore, aluminum. These things all look great across the board. So the metals look great, and that'll probably start to shift a little bit going forward. Oh, this is a good one.
I mean, you said positioning, and when I hear positioning, I'm seeing Brent crude by the speculators, highest short interest ever by a long shot, and speculators, go and do the work yourself. You'll see. They are historically the worst investors in the world, very consistently. They are the worst. These are asset managers. These are hedge funds. There is no group of investors on the planet that are worse than these guys. And these guys have never been more net short of Brent crude oil. Jason Purse, do you believe that the worst investors of all time are going to be right on this trade, or do you think they're going to be wrong?
I think they'll be very wrong. The problem is that, you know, it takes time for these things to shake out, right? And we know that. But really, like, if you look at energy, there's so much things under the surface that's kind of saying like a bounce is probably here. We continue to see fundamentally, we continue to see the data get revised that, you know, everybody thinks we're flooded with oil in the world, and we're really not. IEA came out with a report pretty recently that's talked about that. So we continue to look at this fact that, you know, oil actually looks a lot better than the price is saying. Now, once again, we're price action traders. We're not going to just be buying things in downtrends. But at the same time, we're going to watch that positioning, because once everybody's on one side of the boat, that boat's going to tip over at some point. And that's going to create a very large rally in the oil space. And everything's been pointing to it, whether we're looking at dead volatility, whether we're looking at the energy stocks holding up relatively, whether we're looking at internationals, the refiners, whatever it is. We've seen a lot of bullish talking points and bullish points to basically trade on in that space currently. So I would continue to go, hey, this is probably going to shake out to the upside. But also be ready for the downside. I think it's very easy here. You know, you have a very clear defined risk level here for oil. You start to get under that level. We continue to break down. We get closes below that. I'd be out. But at the moment, it's like, hey, if you're a bottom picking trader in the commodities, not exactly my bag, but, you know, you could kind of find some really good deals in the energy space currently.
I mean, I'm long, as you are well aware.
Yeah,
you have full access to my portfolio, and you see what's in there. And
Yep.
there's a lot of oil and gas plays, so I'm in. And
Yep.
I don't want to be in a position where, listen, as you know, I'm long metals, and we've been very, very right. And am I sitting here doing end zone dances and thrilled about how much money we're making? No, I'm pissed because I should have bought more.
And sometimes
So
that's
I don't want to have that feeling with oil and gas.
That's a feeling you have, you know. And if we look at this here, which is kind of a simple way of looking at energy here, JC, which if we look at it and just go, hey, you know, people continue to like break it down. Well, the energy stocks compared to this and that, it's like continue to buy like what's in your portfolio. Continue to buy the strong ones. You know, you don't have to go crazy.
Right.
Yep. You don't have to go crazy. You don't have to start buying like weakness. You don't have to buy oil when it's breaking 52-week lows, whatever. But if you find a strong stock that looks good in this sector, we got Canadian energy stocks look great. Got some other international names that look great. Continue to own those. And then as we get that breakout, we'll start to buy these other ones, maybe these blue chip names like even Exxon and so on. We'll continue to build that portfolio up. But for now, it's like just buy the strong ones and be patient, because this thing's probably going to shake out at some point. I'd say Q1 of next year. I think also a lot of people don't know this, JC. If you look at, everybody talks about summer driving months when they're energy traders. They're like, oh, summer driving months are great because that's when energy stocks move up and oil stocks move up. You look at the seasonality, that's bullshit. It's completely wrong. But what is right is that supply goes down during the winter months because people start to think, okay, they're not going to be driving as much. The companies stop producing as much oil, gasoline, and so on. And then you start to see that price actually move up. So January, February, March, April are actually the best months, 4-month period for energy stocks and oil. So, if it's going to make a move, it's going to be here. It's going to be now.
Can you just give us a quick update on the COT report? What's the sitch there?
Still waiting. I think it's one more now, 1 or 2 more points, but we're still seeing, it's like when we're talking about Brent, we're starting to see.
No. All the reports catching up, from the government shutdown.
Yeah. Are you talking about just giving people an update of where we're at on that?
Yeah. When are we going to be fully caught up in terms of the data?
I think it was January 4th, January 5th.
By January 4th or 5th, we'll be fully caught up.
Yeah, and that's the point where we'll be fully caught up. And we're also seeing a lot of really cool points. I'm sending you anything that's coming in, which is interesting. Basically during the whole period of the COT report being shut down, you're seeing the oil, gas, basically energy across the board. Commercials were buying the crap out of it. So smart money buying the crap out of these things going forward. Also, corn looked really good. Can't wait for it to be fully done because we don't want to put out information that's not completely updated. But it's like, man, there's some really interesting stuff going on in that space, and I can't wait to update everybody on it.
Last question. What's the over-under? Not what you want, but what you think. What's the over-under on how long it takes the COT report to be in real time on the blockchain chain?
Oh, man.
Gun to your head.
Gun to my head. I don't know if I'll see it in my lifetime.
Stop. Are you serious?
I'm serious. I want to see it. I am so
I thought you were going to say 3 to 5 years. You're saying not in your lifetime?
I'm heartbroken. And this is the thing. I wanted it to happen for so long. I've thought about it for so long. And I know the government always comes in and just stomps on my heart every time. So I don't even know. I know the government's going to government and do everything to muck up a bunch of stuff. But I think it's time, right? It's been time for a long time.
The technology's there, dude. You get a government shutdown and these assholes don't give us the data for months at a time.
It is so frustrating. It would make life so much easier. JC, I hope you're right. I would rather be with you. I hope you're right. I hope it's a few years.
But you know more about this market and this space than I do, so I'm going to defer to you, and you're telling me you're not going to see it in your lifetime. So
I'm just saying, though, the thing, if we're looking at the COT reports, we're looking at the CFTC, I don't feel like they want to give up that control. And I don't know what exactly is their point about it, why exactly they need it, maybe to keep some jobs going. I don't have a clue, but we've had that technology for years now.
Are these just small-minded people in a perceived position of power?
Yeah.
Or is there a legitimate reason to keep it out of the blockchain chain?
Small-minded. I can't see a legitimate reason at all. The more data we all have as traders, the better off we do. Everybody should have access to that data. It's all out there. I know my reports have to go out every single day. When you're good to LTR rules, and if you're in futures, those go out all the time. And so that positioning is there. They knew it the whole time. They could just update it.
Very similar to you shouldn't have to report it because the data is there already.
I know. It doesn't make any sense.
It doesn't make any sense. All right, let's end it on a good note. Let's do a little recess and hop. I just wanted to give a shout out to Disney, man. I got to tell you, a week there with the fam, it was good. Listen, I'd be the first one to be a hater and be like, oh, da-da-da. There's some silly things that they got. They got gender neutral bathrooms and they still got paper straws and stupid shit like that. But for the most part, solid, man. Solid.
Cool. Glad you had fun.
Yeah, it's good.
I want to give a shout out to, I checked off an item off my bucket list this weekend. I've always wanted to go to Mount Vernon, Virginia, the home of George Washington.
Ooh,
and I
how
did
was
that.
that?
It was cool. It was small. There's not like a ton there. You could do the whole thing in like an hour and a half. But it was cool. In the mid 1800s, the family or the descendants sold the property to like a foundation. They sold it for $200,000 in like 1850 something. So that's like $8 million today, which does not seem like a lot of money. It's prime real estate right on the Potomac River. Beautiful grounds, beautiful house. Seems like a bargain to me, but what do I know?
Seems like a win. Yeah.
Yeah.
They sold too early?
They sold a little early, I think. Yeah. It's like right down the river from DC. I didn't realize it was so close all these years.
My mom was asking me about Disney and like, the family and how much money they got. And I looked it up. And as it turns out, there's a reason why there aren't any Disneys in the top richest people in the world. Like
Why?
there are Waltons. You know how many Waltons are in the, because they sold early. They own like less than 3%. When they IPO'd back in the day, they only had 20%. So they missed the whole thing. That's why you see Waltons
IPO'd in like the 70s, right? It was a long time ago.
I think it was like 57. I looked it up the other day.
Yeah.
I think it was, I'll tell you right now, Disney IPO was 57. Man, I'm good.
Well, I want to give a shout out to all my buddies that any guy, a lot of them watch. So we all went riding on Sunday. So it was a bunch of washed up 40-year-olds riding around the park, trying to like act like we're still pretty good. But we had a great time, man. So it was really fun seeing everybody. So thank you guys all for coming up. Had a good time riding. I still put some time in riding here and there. It's a lot of fun, but I'm not that good anymore. So anyways,
you're better than I ever was.
I'm still decent. I still could do some stuff that normal people can't do for sure. But where I was, man, I'm just like one day, maybe I'll get back there. When I'm 50, I'll take my time. I'll have a 50-year-old return. I keep saying this. I'm like, I'm going to come back one day.
You shouldn't do that. Haven't you broken enough bones already?
No. I got a couple more. I got a couple left. I didn't. I mean, there's one or two here and there.
Yeah, don't do that.
All right. Thank you for watching. Thank you, Jason and Matt and Kenny. Kenny's going live in a little over an hour for the long and short of it right here on Stock Market TV. If you have any requests for Chart Requests Live, email your requests in before 1 o'clock Eastern time today. I'll put the email up on the screen. There it is. Send your requests, and then the guys will answer your chart questions on CRL Chart Request Live, 1 o'clock Eastern time today. That's it. We'll be back tomorrow, same time, same place. Drop us a like. Go make some money, all right?
Boo, 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 boo.
Later, guys.
YOLO.
I can't take no